All right, everybody, how are we doing? The Economic Ninja here. I am so grateful to have Andy Schechtman of Miles Franklin with us today to talk about the recent events in the silver market, actually the silver and gold markets. We're going to talk about that, and we're going to talk about some of the factors that led up to it. We're going to talk about behind the scenes in the silver industry. Let's talk about supply crunches, things like that. But before I start, I actually want to have Andy talk to you about a special offer he wants to make, because you guys know I'm all about getting the right prices of precious metals so that you guys have the most that you can in your hands with the dollars that you have that you want to spend on it. So Andy, first off, welcome. And can you tell us about this offer?
Yeah, thanks for having me, brother. I really do appreciate it very much. Before I get to the offer, let me just kind of lay the groundwork and say I've been doing this for a very long time. We've been in business for 31 years, going on 32 years. We've done things old school the entire time. And what I mean by old school is that we've more or less been offline the whole time. We have had, at one point, we did have an online store. And with the proliferation of identity theft and consumer fraud, we moved away from that a few years ago. And we could talk at length about things that I've seen in this industry that would blow your mind in terms of identity theft and the length and the creativity that these people go to steal. So, you know, I have reluctantly been swayed to build a new website, and it's nearly completed. It's at least 75% completed, I would say. It was a bigger undertaking than I had anticipated. We expect it to be done by no later than the beginning of October, I would think, hopefully sooner. So we will have the online capacity at some point. But for now, we're old school. Just for your listeners who don't know me, we've done this for 31 years. We've done $6 billion in sales without a customer complaint. We're A+ rating with the Better Business Bureau. We're one of only 27 authorized United States Mint resellers of their product. And we're licensed and bonded. Now, I live in the state of Florida, but our corporate office is in Minnesota. It's the only state in America where you have to be licensed and bonded. It's very unusual in this industry. Almost every single company in America won't do business in the state of Minnesota for that reason, and it holds us to a much higher standard. For that safety and for that inconvenience, I have made a pledge to a lot of the people that endorse Miles Franklin that we will match or beat any retail price in the United States, and that we have to, you know, for that, you have to kind of reach out and ask us for a current price inventory sheet, which we will send out. But any price that's out there by a major retail company will be. For your listeners, I would like them to reach out to me by email at Andy@MilesFranklin. And within 1 day or less, typically much less, I will reply back with a current inventory sheet and do all that we can to make the transaction simple and worth their time. You know, I've seen a lot of things that still make me feel that precious metals are best held offline, that maintaining privacy and customer integrity is very important, and it's something that I work really hard mentally with, like crossing that Rubicon. Do we want to go there? And I've been persuaded into doing it, but let me just simply say that I will guarantee a good experience, the best price, and you get what you pay for promptly. Little bit less convenient than some of the other people whom you've endorsed, and I do appreciate your trust. But I will make it worth your listeners' while in every other way that I can assure you, until our online site is up and operational here, third quarter, beginning of fourth.
Yeah, I love that. And I know some people that have actually used your services. They brag, they rave about it. And I love it because here, my subscribers can check out our links, the companies that I've been doing business with before. They can check the prices, come to you, try out your services, see how it works. And then if it works as well as they're hoping for and you're talking about, then they can come right back and do it again and secure that best price. So I love that idea. So
thank you. And by the way, they can reach out to me at Andy@MilesFranklin. Andy@MilesFranklin. Don't call my office. Don't talk to anyone there. Talk to me. The buck stops with me. I will make sure that I honor exactly what I'm saying.
Awesome. They'll tell you the ninja sent them, and we'll go from there. And just so you guys all know, Andy and me have been doing some work together just recently because he had reached out and we actually asked him if he'd be willing to sponsor our Dallas event, which we all know where that is right now. We postponed it until May. I'm about to release the dates pretty soon. And it's been an absolute pleasure to work with you, Andy. I really do.
Well, thank you. And I appreciate that. And the sentiment is exact. And you can count me in, pencil me in for that May event as a sponsorship,
Nice.
between you and the good folks at Wall Street Silver. I couldn't think of anything I'd rather do.
And this is a great segue to talk about Wall Street Silver, because I have a feeling by May, I don't like price predictions and all that kind of stuff, because honestly, I'm always wrong 100% of the time. I like to look at the seasons, and it seems like the seasons are changing right now, with silver being literally still underneath its all-time high. It's the only asset class that I know of that can actually brag about that.
Half of its all-time high.
Yeah, literally. So it's funny because I see the rock solid investors, the people that are very successful in life, that look for value, that look at silver and they go, "Oh yeah, I'm investing there. I'm not putting every egg in the basket into it, but that's where with me, I love to put my profits into metals." And so let's talk about that right now, because we've seen a wild year of prices swinging wildly over the spot price. We all know that the markets do get manipulated. We've seen it before. We don't even have to even try and prove that. But let's talk about what's happened this last year, what's happening right now, or how tight are inventories?
Well, it's ironic. Right now, I would say that the inventory right this minute over the last several weeks is as good as it's been for the past 18 months. And premiums have come down to a level that we haven't seen in the better part of 18 months. And it's the summer doldrums, I guess you could say. The last 2 days, however, Friday and Monday, have been reminiscent of the silver squeeze at the beginning of the year.
Yep.
It's been off the charts, crazy. I worked till 2 a.m. last night. You probably tell by the bags under my eyes. And got up. My daughter started school this morning here in Florida. I had to get up at 6, so my wife was shaking me 4 hours after I finally passed out. Said, "You got to go say goodbye to your daughter." So these are the crazy days. In 2020 and most of 2021, 18-hour days, 7 days a week were normal. This is the renaissance that this industry owes Wall Street Silver, owes Chris Marcus, owes Big Swear, owes all the people who are out there telling the truth when the rest of the media is throwing blinders over our collective eyes. And there has been a renaissance, an awakening. Yeah. I have been working with Rick Rule and Sprott for over 20 years. And I've been fortunate enough to service their clients, and very fond of a lot of the things that Rick says. He's a very smart man. One of the things that he talks about is that over the past, right now anyways, we'll go back to the past, but right now he talks about the collective investment in metals across the entire financial gambit, from Joe Sixpack to the Harvard Endowment Fund and everything in between, being 0.5%. Yep. In 1980, when the last time the Dow and gold crossed at 850, that was 8%. Now, I would define 2020 and 2021 from a product standpoint as being the most challenging environment in my 31-year career of getting product. And you could evidence that by high premiums everywhere. Yep. It's certainly come back closer to what's normal, although we're still about double what is normal, not yep. triple or quadruple like we were the last 18 months in terms of premium. But I'll tell you that if we were to see a regression to the mean over the past 40 years, from 8% in 1980 to 0.5% right now, the mean average would be 2.5%. Yeah. It's a 5-fold increase in demand in an industry that would be shut down like that overnight if we see a 5-fold increase. Now, I will tell you that when I look at silver, I see a massive change. And, Steve St. Angelo from SRS Rocco Report published a very cool chart the last few months, where it showed the global mine supply of silver for the past 20 years, of which 80% or more has been used in industrial applications over every single year over the last 20 years, with the exception of 2020 and 2021, that's inverted, where you now see a massive amount of monetary demand with silver. And it's the only asset that comes to my mind that is truly bracketed on both sides, copiously at that, between a monetary demand and an industrial demand. You look at an asset like copper, it's all industrial. Like gold, it's mostly monetary. What you have right now with silver, Ninja, is massive monetary demand, more so than anything I've ever seen. It represented over 90% of all of our sales for the last 18 months. And we had our biggest year ever last year, and we're ahead of that this year. Wow. People are buying silver more than just about anything else. You also have a massive expanding industrial use where you have it in green and in battery and in wind and in solar. You have it in digital. You have an expansive use case for silver, yet if you talk to guys like Keith Neumeyer, he'll tell you it's coming out of the ground at a ratio currently globally of 7-to-1.
Yeah.
It's coming out of the ground at 7-to-1. It's priced at 71 or 72-to-1. It's 10 times undervalued in its relationship with gold. And when you take a look at in terms of the actual fundamentals that support silver, whether it be a diminishing supply, whether it be the expanding use cases, whether it be the inordinately low ratio between it and gold, I don't think you could find a better backdrop, a better setup across the board in terms of demand and uses and supply or lack of supply than you will find in silver. And yet it's priced half of its all-time high. I cannot think of another asset on the planet that would have anything even close to that type of potential.
You know, I completely agree with you. And I've told my subscribers, we've talked about normalcy bias before, and it's really interesting because when it comes to silver, a lot of people say, yeah, okay, Andy, that's great. You know, there's more use for silver than there ever has, but why hasn't the price changed? And I would dare tell people this, there's never been a time in Earth's history that we know of where silver was needed so much today as it was in the past because of the invention of electronics, especially, you know, literally our handheld electronics, right? But what's funny is even though these people that work for these massive conglomerates, we've talked about Tesla before, and literally looking at a solar panel and looking at the sheer amount of silver in a panel, the people that build these panels, design them, and then purchase the raw materials, they suffer from normalcy bias just like all of us do as investors. You know, we're looking at today, okay, silver's this much until it's not that much. And in the last, and I want to tie this into the premiums that exploded when we saw Wall Street silver hit the scene. We're going to try and touch on that too, because that's a first in the silver industry. But when you look at the normalcy bias and all of a sudden the premiums explode, a lot of people don't understand that that's not companies like yourself or SD Bullion or Gold Silver, any of these companies. That's not them like trying to screw the buyer. You guys actually have to pay those higher premiums as well. Can you explain that real quick?
I'm so glad you said that. It's been something that I've wrestled with for the last year and a half. And, you know, when I do a lot of these videos, sometimes you'll see the comments, yeah, you know, they're screwing everyone. And I went back and forth with some guy online about this to the point where I just got exhausted and stopped. You're right. It's not the retail dealers. And, you know, in fact, we're paying higher premiums than we've ever paid in our entire existence in 31 years. But it's not just that. For example, when I buy 50,000 silver kangaroos from the Perth Mint, I buy them 90 days in advance. I hedge it. I pay super high premiums, which you can't hedge. And I'm exposed to that premium risk over 90 days. If the premiums come down, it's too bad. I've already paid it and agreed to pay it. So we're paying the highest premiums we've ever paid to the primary distributors in the mints. Yep. And so it goes both ways. If people want to sell back, it goes both ways. The higher premiums are on bid and on ask as well. And it's a reflection of the inability to source product quickly, you know, and it's a tough sale. I mean, as someone who has to make these decisions, I could say to myself, well, these premiums are too high, but then I don't have any product to sell, might as well go out of business. And so we all are in the same boat. And the funny thing is that no one sells back in this environment. Sellbacks represent less than 1% of our sales. No one is selling. And so the only frame of reference or the recency bias that they have is of inflated ask prices. I get it. It sucks. but it goes both ways, including on the wholesale level.
So let me jump in there real quick. And because you start talking about bid and ask, people immediately go to stock market, right? That's what they think. Oh, he's talking about stock market terms. We're actually not. And here's the proof. We're going to break this down for people at the most basic level. The proof is when Andy's talking about buybacks, we've seen before when Silver Eagle was $12 over spot that you could go on to all these different websites, AppMex, SD Bullion, it didn't matter. They had buyback programs, right, and they were literally offering you $3, $4, even some days $5 over spot to buy the silver from you. And that's what Andy's talking about. About 1% of the people during a rush, during when silver and gold are exploding in price, they don't want to sell it back. And ironically, people run down to their local pawn shop, their local coin store or jewelry store, and they'll offer up their metal when they don't realize what's happening to them at either, they're selling it either at spot or at below spot. And the proof is when you're talking with online retailers or sellers like Andy, they are willing during those hard times, they're going, look, we could buy it back from you at overspot because we're going to pay overspot anyway to these primary dealers. And then, yes, they're obviously charging you more over that because of profit. So that is the raw, true facts of the market that most people just don't understand.
Yeah, I mean, we're buying Silver Eagles back at $4.50 over right now. We've been as high as $7, $8, or $9 over spot.
Wait, can I stop you real quick?
Yes.
So, like anybody right now, like I'm not joking, like people fall on hard times. I get it. And there's times that we have so many subscribers that have literally just held their first 5 ounces of silver in their hands. But sometimes people hit hard times. And I'm telling you right now, there are people like Andy just said, he will pay over right now, and everything changes from day to day because we don't know what the market's going to do as far as supply demand fundamentals. But he, like, before you run down and try and sell it for like 10% under spot to a coin dealer that knows what he's got, give somebody a chance online and try that system. I mean, why not make the most money you can? So sorry, Andy, to interrupt.
Well, no, and the reason that the dealers are, the local shops charge under spot, I feel bad for them because, for one, they don't hedge. And if you don't hedge your product, you have a hard time taking in a large inventory. Yes. One of the reasons that throughout all of this, my company has had some of the best avenues of supply across the whole industry is because we've been doing this for a long time, much longer than all the online companies, all of them. I've been doing this since 1989, before the internet, for God's sakes. And I have relationships with about 200 small coin companies all around the country. And someone like you walks in with 100 ounces of gold, they'll say, gee, okay, I'll buy it. Before you leave the store, they're going to be calling me saying, I need to sell this to you, because they're not hedging it. So they're exposed to the price swings, yep, where I will buy it from them immediately and hedge our position, so we don't care what happens to the price because we're hedged. Well, these guys, first of all, no one sells to them, virtually no one, and everyone, all they want to do is buy product. So when someone does come in to sell, they have to go back the spot, not only to make a profit, but also to protect themselves, yep, from the market swing. Because, yep, if they bid spot or over spot, and by the time you leave, like yesterday, the price of silver dumps, they're screwed and go out of business that way. You can't speculate with your inventory, especially if you don't hedge. And so, yeah, we will always pay above spot, and we don't charge a buyback commission to existing clients from our existing clients who bought from us. So
nice.
Buyback is something we always are amongst the very, very, very best in the industry on as well. And it is a double-edged sword. And they've never been higher premiums over the last year and a half when you buy, but also when you sell. It goes both ways.
So let's talk about the silver dump, actually, because I love this, because in the past, it was funny. I remember I was in the Sunshine Mine or Sunshine Mint talking to them about silver demand and how it fundamentally changed back in 2013, 2014, where normally there was never, people didn't want to buy when silver had gone down. They wanted to buy it when it went up. It's like people like had that FOMO, that fear of missing out. But just recently with the invention, literally the fundamental foundation of Wall Street silver, we have never, in 12 years of me, 11, 12 years of investing in precious metals, have never seen a movement come together and get organized, and where people are sharing facts, photos, videos. They're getting so pumped up and they're learning so much, because everybody a year ago had to wake up and go, wait a minute, something's wrong. Like this can't work if the economy shuts down. Now, now we're seeing when all of a sudden a price smash happens, and if the VIG or the price over spot correlates with that price movement, which we just saw in the last few days, premiums are coming down because there's a supply. People are racing out to buy more because honestly, in the last 6-7 months, they paid a higher price for their metal. So now they're going, heck, I can hedge my own position and get my dollar cost average down. So if you don't mind talking about that, and then what I believe, if this continues and we see even more people rushing in to buy metal right now, that's probably going to flip real quick as far as
that's how it happens every single time. Every single time the price gets clubbed, the premiums go straight up.
Yeah.
Let's talk about the clubbing for a minute. I'm going to bring everyone back to January.
And I love clubbing. I don't know which one we're talking about.
Not that kind of clubbing. No, but,
we're talking about the smackdown.
The clubbing that we saw on Monday. And it was in gold, first and foremost, at least in terms of the footprints. We'll come back to what happened on Monday. Yeah. Let's go back to January 31st, February 1st, a very unusual environment. This is during the silver squeeze. I am on vacation in Florida. Before we bought this home, and 10 days. Those few days, I never left the house, ever. I never, over 10 days, the only time I left the house was to come across Alligator Alley to Delray to look at the home that I'm now in, leaving Minnesota. The rest of the time, I worked 18 to 20 hours a day, didn't see my kids, didn't see the beach, never left this room, maybe just to go out on the balcony to get a little sun on my face, and that was about it, because it was that crazy. Yeah. We're in this environment. The phones are ringing. People are going nuts. Wall Street silver is here. Email, phone call, craziness, right?
Oh, yeah.
Silver's climbing up to $30. There is more silver being pumped into SLV than in the history of the trust, ever, over a 2-day period. Couldn't be more bullish for silver. Friday night, typically on a Friday. Okay, so the market's open. Every day, right? But it sleeps at Friday at like 5 o'clock Eastern, 6 o'clock Eastern, and wakes up on Sunday, 6 o'clock Eastern. Yeah. Those 2 days it sleeps, right? And the rest of the time it's open and it travels around the globe. Yeah. So at the end of business on Friday, on a typical Friday, my head trader will call me and say, Andy, do you have any interviews this week? Anything I should know about? How long should we get? In other words, we have to, all our inventory is hedged, but if we want to hedge our investment over the weekend, or what we're going to sell, rather, over what we anticipate to sell over the weekend, investment being the wrong word, what we intend to sell, we have to buy some contracts long so that we can sell and have those covered. So I said, look, this is kind of a nuts time. Let's buy 11 contracts. So we bought 11 contracts at 5,000 ounces apiece. We were 55,000 ounces of silver long into the weekend, right? So Friday, it's crazy. The phones are ringing. Wall Street silver, it's going nuts. It's 2:30 in the morning. I'm still throwing out emails. I get a call at 6:30 in the morning Saturday, frantic, from my trader. He said, dude, well, before I even get there.
Yeah.
Friday evening, I get phone calls from people. He says, do you see that ST Bullion and JM Bullion and ATMEX have all shut down?
Yeah.
They're all out of product. And I look at it and I'm like, yeah, it looks like they're out of product for sure.
Yeah.
But that wasn't it. So the next morning I get this call and he says to me, my head trader, he says, dude, you sold 90,000 ounces of silver last night. You're 35,000 ounces exposed to the open. I said, shut it down. Yeah. This is why they all shut down. Not because they were out of product, because that they had sold so much that they are exposed to an open that everyone thought was going to gap up $10 at 6 o'clock on Sunday Eastern. That's now, right. It did actually gap up $1.50 immediately, and it cost us almost $42,000. But I was expecting it to gap up 10. I'm thinking this is going to cost me hundreds of thousands of dollars. I'm sweating, waiting for this to happen. And because no one knew the demand that we would see. And this is why they shut down, because they were staring into the abyss. If it opens straight up, they get clobbered, right? Because they sold stuff short, unhedged, and the market was going to quickly open up higher. That's what it looked like. And indeed it did. So everyone shut down. We shut down for the first time in 21 years, because not because we were out of product, because we were exposed looking over the abyss. So here's where it gets really nuts, and to get all the way around to answer the question, okay? In this environment where massive silver is plowing into SLV, where you got this new amazing group, this Wall Street Reddit group, silver group that is taking on like a house on fire. You got so much demand that all of the retail companies are shutting down. It's just a dream for someone who's long silver, right? So Sunday morning rolls around, and in the access market, so London closes, you get the PM fix, we're heading towards New York. There's a little dead spot there. It's called the access market between London closed, New York open. Some idiot dumps $1.5 billion worth of silver, and that worked out to actually 1.5 billion ounces of silver, excuse me, 1.5 billion ounces of silver, which works out to nearly almost exactly 2 years of global mine supply. Dumps it onto the market when everyone's sleeping in the access market. Yeah. Now, this guarantees the worst possible execution. And in the real world, this trader would first be fired and then secondly hunted down and shot, maybe not even in that order, because you are guaranteeing the worst possible execution. And what happened? The price of silver fell by $4 immediately. And then that drops it below the 200-day, and everything triggers. The non-emotional algorithmic programs trigger it, boom, 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 it sells and drops. Yeah. And so what happened over the next few weeks? Well, Goldman Sachs pulled out 90 million ounces, backdoored it at $4 cheaper subsidized price out of SLV. Now, this is the exact same thing that we saw happen here Sunday night. Same exact thing in the access market. Some genius dumped $4 billion in notional gold contracts on Sunday night in the market when it was sleeping. And this was done specifically as a drive-by shooting for effect. Yep. It was done 100% just indiscriminate of a good price. It was done just to drive the price down. It is a drive-by shooting. It has no bearings on reality. And in both examples, whether it be silver being orchestrated down to freak out all the new Johnny comes that just walked on in the Reddit group, or gold being knocked down last night or 2 nights ago, in the middle of the night, this is not how anyone does business.
Let me jump in real quick. I want to give some credence to what you're saying. So we're going to break this down really simply for my subscribers. If you had a ton of homes, let's say you had 100 homes and the housing market is super hot right now, and there you had all those 100 homes in one town, and the town was hot because you could barely find inventory. You had 5 buyers for every 1 home for sale, but you wanted to get out of the market because you thought that the housing market was topping. The question is, would you take all 100 homes and just put them on the market at once? No, the answer is 0 chances of that, because you knew that you would now flood the market with homes and you wouldn't have enough buyers to buy them. So what you would do is you would slowly sell one at a time. Now, I'm glad Andy uses the word genius, because obviously, let's catch the sarcasm here. That is an obvious fact that a complete moron, let's just call a spade, would dump that much paper contracts of metal. Now, let's talk about the flip side. Andy, have you ever seen in your entire career COMEX bars coming off the market and being sold on online dealers?
No.
So we have literally a fact right now, never in history, because there's always been the whole how much silver is being held in the COMEX, is it being drained, blah, blah, blah. For the first time in history, we are watching these massive bars coming off and being offered to retail investors. What do you think? Now, I really attribute the combination of Wall Street Silver, the organization, the instruction, the education. People are waking up, and now, like you just said, they see a smackdown, and everybody in my comment section are going, we love smackdowns, because they're grabbing the inventory off the market. Physical is actually being drained right now. And that, even Rick Rule, he's saying, I thought that Wall Street Silver was going to get clobbered just like the Hunt brothers. The Hunt brothers are 3 guys with leverage. This is like 1 million people with cash. I mean, it's never happened before.
It's because of them that so I have a very close relationship with the Royal Canadian Mint. And because we have, for 10 years, we've had a very robust storage program with Brinks Canada. And we have exclusives, North American exclusives with Brinks in fixed rate and safe deposit boxes in Toronto, Montreal, Vancouver. Got to be very friendly with the RCM. And because of Wall Street Silver, we have initiated a brand new 1,000-ounce bar silver program, Royal Canadian Mint, brand new silver bars. I never would have dreamed of doing that before Wall Street Silver. They have made a profound effect, truly a profound effect. Jimmy, Lee, and Ivan have done an amazing job, a job that I never would have. In fact, they have given me a renewed zest for this industry. I for a very long time thought, all my clients were they were dying, they were maxing out what they were going to spend, and their kids are just going to sell it. I was wrong about the younger generation, completely and totally. I admit it. They are industrious, they are coordinated, they are smart, and it's been a joy to be proven wrong. And I'm sorry publicly. I never said it publicly, but I'll tell you, I felt it that, I was thinking, maybe it's time to sell my business. I don't ever want to ever feel that way again. Yeah. And it's because there has been this renaissance, this awakening that has blown my mind to the point where the demand that we see, Ninja, is nothing commensurate with the price. The price should be miles higher than it is. And it's because of this naked short selling, this driving down the price, which is used specifically to create a perception of reality. It's misdirection. It's the no-look pass. Let's drive down the paper price. And if you look at what's happening on the other side, in 2020, we saw almost 300 million ounces taken off of the COMEX at subsidized prices. Now, to put that in perspective, that is nearly a decade's worth of normal COMEX deliveries. COMEX was never a delivery mechanism, but you are seeing in the past year and a half, we're already over 500 million ounces delivered off of COMEX. Now that's nearly almost 2 decades worth of deliveries prior to 2020. So the biggest money in the world is misdirecting with the no-look pass, drive the price down and gobble it up when everyone is fixated on other asset classes at all-time highs.
Yes.
So you let other assets rise, you drive the crap out of the other one, and when everyone is bummed out that the price is not reflective of what they think it should be, they move on and look elsewhere. And that's what allows a company like JP Morgan, according to Ted Butler, to amass 1 billion ounces of physical silver. That's 10 times what the Hunt brothers tried to buy.
Yeah.
So you're seeing the biggest money in the world drain the COMEX, take it off of the London Metals Exchange through exchange for physical, backdooring it out of the ETFs. They are using the subsidized price and this manipulated narrative to accumulate the lion's share of assets while the rest of us are misdirected looking elsewhere.
And we're in a time right now where people are gaining wealth at just a breakneck speed. And I just got to bring up the crypto side of it too, because there's all kinds of dealers right now that are accepting cryptocurrencies like Bitcoin for silver, right? So there's so many people that are making these amazing gains, and then they're deciding to take a little bit of money off the top, which is very prudent, and buy something physical in hand. And because it's like the one asset class that rockets up, you want to take a little bit off into the ones that you believe in that haven't taken off yet, and you just play those. I like to swing trade from different asset classes like that. Have you seen anything like that in the industry? Where this is the first time I think people are taking cryptocurrency, something other than currency, fiat currency, for precious metals.
Yeah, we do. We take Bitcoin, and the only reason we do, I was talking to Big Swear about this today. In fact, he and I are going to do a show about some of his subscribers who are very heavy in Theta and T-Fuel converting to Bitcoin and then pulling some off. We do because COMEX trades Bitcoin futures, so I'm able to hedge my exposure in taking Bitcoin. There are no other cryptocurrencies that anyone will take because you can't hedge it. I'll make an analogy, exactly what you are saying. Every year, for many years, my family would go out of town with another family, and the guy that the other father was an all-American wrestler, a big guy, and we'd have a great time. We'd end up usually at a casino at night when our families were sleeping, and he took great joy in trying to get me drunk, and then because I couldn't keep up with him, and then at the end of the night, every single time we would play blackjack, I didn't see it, but at the end of the night, he'd pull out just wads of chips.
Yep.
stacks. And I'd say, how the hell did you do that? I didn't see you win.
Yeah.
He'd say, well, you probably didn't notice, but every single hand I won, I pulled a green chip off and put it in my pocket.
I do the same thing.
That's how you win. That's how you win. You like Jim Rogers says,
yeah.
When you sell when things are high and you buy when things are low. Well, you don't have to remove your entire position, but take a few chips off, put it in your pocket, and put it into something that is going to provide a tangible return for you, so that you walk away at the end of the night with a pocket full of chips, no matter what happens. Now, hopefully, both go up, but the point of it is that I'm a big advocate of that, and that's why we take Bitcoin, not because we want to accumulate it ourselves. We do it through BitPay. It's specifically because we can hedge our exposure to the risk of accepting that as a medium of payment.
Yeah, I love that. So, hey, this one's going really long, but it's because I'm getting super pumped up with the Wall Street Silver and all the changes that are going on in the market. I want to thank you. And if you don't mind, just at the end, if people jumped in this halfway, do you mind just real quick before we exit, explaining again your offer? You're wanting people to shop around and then give you a shot at beating everyone else's price.
Absolutely. And I'd like them to please make sure to send me an email. And I know I'm putting a lot on my plate. You have a massive following. I'm so honored to be able to talk to your people and to be here with you. For that, send me an email. Give me just a couple of hours return time. I will get back to you. I'll send you current prices, and I'll make sure that in comparison or relative to any major retailer, we'll beat their price. We'll match it for sure or beat it. And now I just want to make one caveat. Sometimes dealers are able to buy product at a really low price and then blow it out the door. There will be one or two backdated items that, hey, I don't have it, or they're giving it away. 99.9% of the time, especially if we're talking brand new product 2021, I can match or beat anyone in the country 100% of the time. So send me an email, Andy@milesfranklin.com. I will personally reply. I will send information about our company. I will send a current price sheet. And you have my promise that I will match or beat any major company in America, especially on brand new product, not even close. On numismatics, gold, no one can come within a country mile of me. And so I will do all that I can to make it worth your listeners' time. We're licensed, we're bonded, we've never had a complaint. We're US Mint resellers, one of only 27 in the world. Reputation and integrity means everything to me, Ninja, and being here with you is a great honor, and we'd love to talk to your people personally.
Awesome. And people, everybody, to all the listeners, remember this deal is for today or even in the future too. Use Andy as a resource. When silver's moving in prices and you're about to go buy, go shop around. That is the most important part. Then shoot Andy an email, tell him the Ninja says that you're going to crush it for me, and he'll know exactly what you're talking about. So thanks again, Andy. We're going to do a part 2, but I want to get this interview out immediately because of the silver price drop recently. So again,
much appreciated. Absolutely. I look forward to part 2. I'll look forward to chatting with your people. And again, just thanks a lot.
I'm looking forward to seeing you in person in Dallas. We're going to have a lot of fun there. It's going to be awesome.
Looking forward to that as well.
All right, guys. With that being said, the Economic Ninja is out.